All right, so we're seeing a number of issues pop up in a relatively short period of time. The common themes to be somewhat loose lending. Is that something that investors need to be concerned about going forward? Do you expect more of this to come up, what Jamie Dimon very colorfully called cockroaches?
Yeah, I think loose lending might be a bit extreme, and banks have done a great job tightening the credit box since the financial crisis. Right, leverage is down. Banks are really, the balance sheets are in a really good spot. They've got a lot of capital, but we are going through this normalization process now. These three distinct credits that you've alluded to, they're coming, they're coming pretty quickly relative to each other, and that's really startling investors as you go through an otherwise pretty good earnings season.
All right, so it seems like you have confidence these are quote unquote one-offs, not a larger problem. What's giving you that confidence? What should give investors that confidence if they want to continue to invest in regional banks and financial companies in general?
If you look at the numbers, right? If you look at the balance sheets, non-performing assets, non-accrual assets, we're coming off of multi-year lows. So the process of normalization, it's happening. But if you look at non-accruals, net charge-offs, inflows to non-accruals, banks are doing a pretty good job. The other thing, Frank, is we haven't seen a ton of growth on the bank's balance sheets in recent years. We have seen a ton of growth in private credit, and that's getting a lot of attention. But the underwriting, the screws have been really turned up over the last 15 years, and that's partly because of regulation. So we think bank balance sheets broadly, there are going to be one-offs, but bank balance sheets in general are in a pretty good spot.
All right, Chris, I think the question people are trying to figure out is the regional bank space broadly, is that investable, or is it a stock picker's market when we're looking at the regional banks? Do you have confidence in that basket of stocks broadly?
Yeah, one of the number one question we've been spending time with investors on since called July is when do you rotate out of the largest banks, which are more expensive, and when do you take the value opportunity into regionals? Now, there's a 30% valuation differentials between the JP Morgans of the world and some of the regionals. Our call at KBW is you still want to be overweight the universal banks, the largest banks. And really, one of the things that we come back to, Frank, is the theme of consistency, right? JP Morgan's results were exceptional this week. They did have exposure to some of these credits we're talking about, but you didn't see it impact results because the ROE are so strong. The diversification of the business model is so strong. So we are picking our spots in the regionals. The 50 to $100 billion banks, they're primed for deregulation, right? We're seeing, companies like East West, Columbia, these companies, Webster Financial, they're trading at 8 times earnings. So you can pick your spots, but we still want to be up cap in the big banks.
So is that really the story right now, that after some of this distress, that the valuation of these regional banks is attractive and maybe kind of overshadow some of the lending concerns that people may have today?
Yeah, valuation's, always going to be something you look at, but in a time where there's a lot of uncertainty, valuation's secondary. People want to look at their exposures. They want to sell first, and they're going to figure it out later. But that's also where you get, the opportunities over the medium term. When you and I talked in 2023 during the crisis, Western Alliance was a company that was really at the crux of a lot of this. They did really well, communicating to the street. They got out of a lot of the problems that they were, talking about. The balance sheet came out in a good spot, and the investors made a lot of money. So we are picking our spots.